Bitcoin just crumbled to 80K, over 1 trillion in crypto wealth wiped out. Just weeks ago, it was at 126K, and everyone was saying it's going to go to 200,000 by the end of the year. Now we're staring at a potential collapse to levels we haven't seen since early 2025. Some people are even saying this could crash to 10K. If you have any exposure to crypto, the next few days could determine whether you survive this crash or you get completely wiped out. Let me show you exactly what's happening and what you need to do right now. Welcome back to the channel. I'm your host, Ali. And if you've been watching your portfolio bleed this week, you're not alone. This has been one of the most brutal Bitcoin crashes in recent memory. And the scary part, it might not be over. Let me give you the facts. Bitcoin peaked around 126K earlier this fall. Everyone was euphoric. Mainstream media was calling for 150 to 200,000, even higher targets. Then something broke. Bitcoin started sliding, first 110, then 100, then 90, and just this week, Bitcoin briefly touched 80,000 on multiple exchanges. According to some news agencies, Bitcoin dropped to a 7-month low, with some analysts warning that a break below 80,000 could trigger a much heavier losses. Meanwhile, Bloomberg reported that the crypto world has wiped out over 1 trillion in value. That's trillion, with a T. But here's what's really interesting. While crypto is collapsing, the stock market has been slightly recovering. The Dow is up, the S&P is bouncing back, but Bitcoin is still in freefall. That decoupling tells us something important is happening beneath the surface. In this video, we're going to break down exactly why Bitcoin is crashing, analyze the critical technical levels that determine what happens next, and most importantly, give you a clear strategy for navigating this chaos. Before we dive in, smash the subscribe button and hit the notification bell. Crypto moves fast, and you need updates to stay ahead. Let's get into it. First, why is Bitcoin crashing? The immediate trigger is risk-off sentiment across the financial markets. According to Reuters, cryptocurrencies got wiped by flight from risk. We've talked about this before. When investors get scared, the first thing they sell is risky assets. And let's be honest, Bitcoin is one of the riskiest assets you can own when you compare it against other things. No cash flows, no dividends, pure speculation on future value. So when markets get volatile, Bitcoin gets hit hardest. But there's more to the story. The Fed is playing a huge role here. Remember, Bitcoin thrived in zero interest rate environment of 2020 and 2021. When money was basically almost free, people speculated on crypto. But now, even though the Fed is cutting rates, they're still way above zero. You can get real returns on safe assets like treasury bonds and other things. So why take Bitcoin risk for potential similar returns? Forbes published an article titled "Serious Fed Warning Triggers Sudden Bitcoin Price Drop." So the connection here is clear. When the Fed signals uncertainty about future rate cuts, risk assets like Bitcoin go down. There's speculation that if the Fed pauses rate cuts or hints at rate hikes, Bitcoin could fall even further. But that's not everything. That's just one factor. There's also the technical breakdown. Bitcoin broke through multiple support levels that traders were watching. There's a psychological level at 100K. Then the 90,000 failed. Then, according to CoinDesk, Bitcoin suffered what we call a flash crash on exchange Hyperliquid, where it dropped 3,000 in just 1 minute. Now, what happened there is it triggered cascading liquidations, forced selling of leveraged positions, which pushed the price even lower. This is the danger of crypto leverage. When prices fall, leverage longs get liquidated, creating selling pressures that pushes the prices lower, triggering more liquidations. It's a death spiral that can happen incredibly quickly in crypto markets, unlike the regular stock market, where prices don't fluctuate that quick in that short amount of time. There's also the macroeconomic picture. Because according to my research, we're seeing about $1 trillion in crypto crash because corporate Bitcoin holders are getting nervous. There are at least 35 companies, starting with MicroStrategy at the top, going all the way down closer to the bottom where GameStop and others that own at least 4,000 or more Bitcoins and have them on their balance sheets. So what happens? They have their own revenue from their own business. Then they have Bitcoin, and they lost about 28K so far on each Bitcoin in the last couple weeks. This means that they have to report these unrealized losses on their Q4 earnings report. So let's take GameStop, for example. They had $169 million in revenue. When you take Bitcoin out of that, they have 141 million. But then they have to realize all the 120 something million in losses from Bitcoin. Even though their revenue was 141, they have to report the loss in Bitcoin cost. Even though they're not down on their Bitcoin investment, it's still a loss because of how Bitcoin revenue is reported. So it's a bit of a slip here. All these companies, they're seeing these unrealized losses pile up. And if these companies are forced to sell, that creates additional downwards pressure. And I think some of that is already happening. Finally, there is sentiment. The fear and greed index for crypto has crashed into extreme fear territory. When everyone is panicking, prices tend to overshoot to the downside. That's not surprising. We might be seeing capitulation, the final phase where weak hands get shaken out before a bottom forms. Now let's talk about the most important price lines for Bitcoin and crypto as a whole. According to analysts, 80,000 is a very significant line. It has historical significance as a major support area from early 2025. If Bitcoin breaks below and holds below 80K, it's going to open the door to much, much more losses. But how low can it go? Let's look at some of these possibilities. As you can see on the chart here, the first major support level is around 80,000. Now, this is on the daily chart, so you're not seeing a lot of the bounces on there. But if you zoom into this area right here, you're going to see those bounces off 80K happening a lot. The next level is 7450, just around here, where we had a big drop and then a bounce back, and which then took it all the way up to 126,000. So let's look at some of these information. In April, this was the tariff turbulence or liberation day. If Bitcoin falls to that level, it's going to represent a roughly 40% decline from the peak. It's painful, but it's not unprecedented for Bitcoin. But here's where it gets crazy. Yahoo Finance, of all places, reported that one analyst is warning Bitcoin could fall to 10K. Now, I'm skeptical of that extreme prediction. But the fact that credible analysts are even discussing five-figure Bitcoin shows how bad sentiment has become. A drop to 10,000 would be a 92% decline from the peak, comparable to previous Bitcoin bear markets. More realistically, many technical analysts are looking at the 50 to 60K mark. And if we look down at that range, we're looking at somewhere in this area, which was the previous sideways consolidation, you can call it, before this jump to these levels. This is where Bitcoin spent much of 2024. A return to that range would be about a 60% decline from the peak. This is pretty typical for Bitcoin corrections. But according to Bitcoin magazine, Bitcoin hit stress levels never seen since the FTX collapse in 2022. Remember what happened after FTX? Bitcoin fell from around 20K to below 16K before eventually bottoming and recovering. We could see a similar pattern here. On-chain data is flashing warning signs. Short-term Bitcoin holders, people who bought in the last 155 days, are capitulating. They're selling at a loss, which creates downward pressure. However, historical analysis shows that when short-term holders capitulate in mass, it often marks a bottom. The question is, how much lower do we go before that capitulation is complete? There are also the fear of liquidity event. If a major crypto company fails, a large Bitcoin holder is forced to liquidate, or a government decides to sell seized Bitcoin. We could see a rapid drop to much lower levels. These tail risks are real and should not be ignored. Now, on the flip side, Bitcoin has shown remarkable resilience over its history. It's died hundreds of times, according to media reports, yet always recovered to new highs eventually. The 80K level could hold. We could see a reversal. And 6 months from now, we might be talking about the bottom being in. Nobody knows for sure, though. Let's talk about the altcoin massacre. While Bitcoin is down badly, altcoins are getting absolutely destroyed. Let me explain. In crypto, there's a saying, when Bitcoin bleeds, altcoins hemorrhage. Bitcoin dominance, as I marked right there, it's its share of the total crypto market cap. This tends to rise during bear markets because scared investors flee to the safest crypto asset, which is Bitcoin. But even that safety is relative. Ethereum, the second largest crypto, is down even more than Bitcoin on a percentage basis. We can see on the right here, in 30 days, Ethereum is down 29%, Bitcoin is down 22%. So, if we look at other altcoins that were hot just weeks ago, tokens related to DeFi, NFTs, gaming, whatever the latest trend is, they're down 50, 60, even 70%. Now, according to Bloomberg, the broader crypto world has seen 1 trillion in value destroyed. We mentioned this before. That wealth isn't just Bitcoin. It's spread across thousands of cryptocurrencies, many of which may never recover. But here's the brutal reality. Most altcoins from the previous cycle never made new highs. If you held some random altcoins from 2017, most of them are still down 80 to 90% below their all-time highs. Even after the massive 2020-2021 bull run, the same could happen to today's hot altcoins. The projects with questionable fundamentals, weak terms, or no real use case are getting exposed. This is the downside of crypto. There's no earnings, there's no cash flow, no fundamental valuation method. When sentiment turns, prices can fall to near zero based purely on fear. And as you can see, the fear and greed index is red hot. Stablecoins are seeing some interesting dynamics too. There have been some concerns that a temporary depegging during high volatility could happen. If you're holding large amounts of stablecoin on questionable exchanges, make sure they're legitimate and backed by real reserves. One silver lining. The shakeout could be healthy long term. It separates real projects from vaporware. Projects with actual utility, strong communities, and sustainable business models, they will survive. The garbage won't. And if you're a long-term crypto believer, bear markets are where future winners are built. Short term, it's ugly. And if you're over-leveraged, undiversified, or emotionally attached to your positions, this could be devastating. Let's talk about your survival strategy. Here's 5 frameworks that could help you survive or potentially thrive. Number 1, first and foremost, never invest more than you can afford to lose. I know I say this a lot, and this applies to every type of asset or investment, but it's never been more important. If losing your crypto investment would significantly impact your life, your ability to pay rent, feed your family, retire, you have too much in crypto. This crash is a reminder that Bitcoin can and it will have 50% downturns. Strategy 2, if you're not already in, don't try to catch a falling knife. Yes, Bitcoin at 80K might seem like a deal compared to 126, but things that fall 36% can fall another 36%. Wait for signs of stabilization, higher lows, improving momentum, positive news catalysts before deploying significant capital. Strategy 3, if you are holding Bitcoin or crypto, use this as a gut check. Ask yourself, if this goes to zero, will I be okay? If the answer is no, you should probably reduce your position even at a loss. Preservation of capital is more important than your pride. Strategy 4. Dollar cost averaging makes sense if, and it's a big if you believe in long-term Bitcoin thesis. Rather than trying to time the exact bottom, you should do small amounts of investments consistently. If Bitcoin falls below 70K, buy some. If it falls below 60K, buy some more. This removes emotion and builds a position over time. Now, number 5 is diversification beyond crypto. And this works in any direction. If your entire net worth is in the stock market or in Bitcoin, this crash should terrify you. Make sure you have exposure to other things, real estates and other assets that don't move in lockstep with crypto. Because according to Unchained, prominent signals that Bitcoin could fall further include weak technical charts, poor on-chain metrics, and negative momentum. But they also note that extreme fear often precedes bottoms. The key is being patient and not forcing trades. One tactical point, watch Bitcoin dominance. If Bitcoin dominance is rising, it means Bitcoin is outperforming altcoins, which typically happens during bear markets. When Bitcoin dominance starts falling and altcoins begin outperforming, that's historically been a sign the bear market is ending. And also keep an eye on the broader macro environment. If the Fed actually cuts rates in December and the stock market rallies strongly, Bitcoins could catch a bid. Conversely, if stocks roll over, crypto will likely follow. Finally, some of the best buying opportunities in Bitcoin history came during maximum fear, like when Bitcoin was 3,000 in 2018. Seemed terrifying at the time, but that was an incredible opportunity. When Bitcoin was 15K in 2022 after the FTX felt like the end of crypto. But it was a generational entry point. So you have to ask yourself, is 80K Bitcoin today the same? Maybe. But you have to survive the journey to find out. Look, crypto is brutal. It can make you rich and wipe you out all in the same year. But that volatility is the price you have to pay for potentially life-changing gains. The key is surviving the drawdowns. If you're still around for the next bull run, stay calm. Don't make emotional decisions. And remember, this too shall pass. Bitcoin survived worse. And if the technology truly is revolutionary, it will survive this too. And it will crash again, and it will survive that as well. We're going to continue to cover major developments in the crypto market, so make sure you're subscribed. If this analysis helped you understand what's happening, make sure you hit the thumbs up on this video. Subscribe to the channel and ring the notification bell so you don't miss future updates. Make sure that you invest responsibly and never risk what you can't afford to lose. Until next time, stay safe, stay diversified, and I'll catch you in the next video.